Yo boys, sorry for not uploading for a little bit. I have been a bit busy. I've been so focused on trading. I haven't been uploading that much, but you know, winter arcs here. I'm going to stay consistent with the videos, the YouTube, TikTok, so on and so forth. But yeah, I just wanted to make a quick video. Basically, I made this plan. I didn't even make this to make a video about. I just made this plan just purely for when I wake up and I get out of bed, whatever. I see this straight away. I can't avoid it because it's there. It's always there. 24 hours of the day. I'm here and I look over this part of my room. I see this shit. So yeah man, let's just get into it anyway. So to form an A+ setup, in my opinion, and obviously if you're watching this video, I recommend that you follow this as well. If you want me to like go in deep detail into this, I'll try and share as much detail as I can in this video. But if you want me to take it over to the charts and hop on the computer and show you that, I can do that as well. So yeah, daily bias. This is the first component of how I find my A+ setup. Daily bias. So if I'm following the daily bias, no matter what, I'm gonna have such a stronger setup than I would be not following the daily bias. Because once you're following the daily bias, say on the daily chart, higher time frame, we're in a bullish trend. If say we just had a retracement and then now we've had like the last candle close bullishly on the daily chart, what do you think the second one's going to do? It's going to break structure, it's going to keep following that bullish trend, and that daily candle's more than likely going to close bullishly. So if I'm seeing that, I'm going to have a bullish bias. That daily bias is going to be there. But it doesn't just mean, just because it says daily bias isn't just the daily chart. It's basically the higher time frame. So the daily, the 4 hour, the hour is what I like to base it off. Obviously the daily is going to close at the end of the day. If you're a day trader like me, you want to be looking at like the 4 hour, the 1 hour, and then you can really get a nice bias for your day. You can find the 4 hour, you can find the hour on top of the daily chart, bro. That is going to make your win rate so much higher, and also you're going to avoid a lot of bullshit. High time frame liquidity sweep. So in my model, I always follow the Asia. I'm just going to make sure this is still recording. Yeah, it is. So I always follow Asian sweep low or high. So say our high time frame's bullish and we've got wicks below the Asian session low. That's high time frame. When I'm looking at the hourly, I'm basically looking for these high time frame lows to get swept. Once they've been swept and then price has rejected it, wicked out below those wicks, took people out, and then closed above, then I'm going to look for my model and I'm going to take the market to the other direction. Simple. Market structure shift, break of structure, imbalance, or order block. So basically, after I've found these two things, I'm looking for a market structure shift. After the sweep's happened, the market structure shift comes in. If you have the market structure shift, you don't need a break of structure, because this is actually a lot stronger than a break of structure. Break of structure is basically just following the trend, but price is breaking to the next high, breaking through to the next high, or breaking a last. Yeah, you understand what I mean, it's simple stuff, man. This is basically a stronger market structure shift. Imbalance is a retracement tool, and order block is also a retracement tool. So say we have rejections off an imbalance, or rejections off an order block. If we're bullish, and price is rejecting off a bearish imbalance, or a bearish order block, that's just way stronger confluence to take the market in the opposite direction. So if it's bearish, you go bullish. If you're bullish, you go bearish. Following the DXY. The DXY is a dollar index. If you don't look at this, you need to start looking at it, man. Because basically, right, so if the DXY, so all USD pairs with USD first are going to move in correlation with the DXY. Any pair like Euro USD and like GBP USD, well, don't start with USD first and start with the like the GBP or the Euro first. They're going to move in the opposite direction of the DXY. Remember that. This is a tool where basically, after I found these things, this isn't like a fourth step. This is what I'm doing in the whole thing, and I'm doing this before I do anything else. Because the DXY, if the DXY isn't running smoothly and it's not trending, I'm not taking a setup. I am not taking a setup. If this isn't running smoothly, no setup from me. If it is, and I'm looking at pairs, I'm seeing the Asian sweep high or low, I'm following the daily, liquidity sweep, market structure, shift, break structure, imbalance, order block, whatever. And normally these two will happen, and then you use these two as a retracement. So these will happen, and then you don't enter off of these two here because you're not going to get a good risk to reward. But once this has happened, and then you get a retracement into an imbalance or an order block, fair value gone. Sniper, 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 bro. You're standing there with a loaded sniper. You've got one bullet in it, one trade, and after these happen, that three retracements happened, you could use a limit order. Boom, snipe, clean, bang, bang, bang. Every time, it's gonna hit 70% of the time. That shit, bro. If you're using all this together, yeah. Follow DXY. Use it in correlation with everything else. If the DXY isn't good, nothing's going to move. If DXY is in consolidation, everything else is going to be in consolidation. And if it has like a little move, when the DXY is in consolidation, if other pairs move, I guarantee it's going to be manipulated. Your ass is going to get turtle souped. Solid market structure. Just like what I said here, if this isn't moving strong, I don't want to trade. I don't want to be in that market. So yeah, solid market structure, price action. You need these two things to be okay, and fucking not okay. You need these two things to be solid. So if these aren't solid, you're not gonna be able to catch a clean trade. Normally, you know, we're hitting like 20 pips plus till I don't scalp. Sometimes like maybe like a 15 pip is still nice returns if you manage to get that 1 to 3. And you get a sniper, but yeah, these two things are very important, man. They need to be solid, because if market structure isn't solid, if your PA, your price action isn't solid, you're not going to get a clean trade. Markets aren't going to be moving anywhere. Most likely going to consolidate, or it's just going to keep manipulating. And so like you'll have your setup and it'll go low, and then it'll go high and it'll just keep coming back low, and you're also getting manipulated, bro. So make sure this is solid. Sniper entry. Obviously with my setup, daily bias, high time liquidity sweep, I wait for market structure shift or a breaker structure, and then the retracement happens where I can get my limit order in or manual. This sniper entry comes up. When I follow my strategy properly, and I'm waiting there for that retracement, I'm getting that sniper entry. Remember what I said? Me sitting there with that one bullet. I've got one bullet left. If you've got 10 bullets in a chamber, you're not going to feel that much pressure, because you know if you miss a shot, you know, you've got more. But here, you've got one bullet, bro. One bullet. You can't mess it up. So you wait for everything, and you hit that one bullet. Trending markets only. Correlates to this, this, this. Trending markets. If you're not in a trending market, don't take a fucking trade, because the markets are going nowhere. Nowhere. That's all it is from me, really. Take a good look at that. Screenshot it. Do whatever you want with it. Yeah, man. This is solid. It might not all be in, you know, exactly how I'd look at it in numbers wise. But when you pair all of these things together, and every morning you're looking at this and it's in your head, you know, these things, this should be first, really, because this is paired with daily bias, and then these two. But you know, I can look at this in the morning, and these are all the steps to my A+ setup. So yeah, man. This isn't even free stuff either, man, but I'm giving it for free. Trust me, man, if you follow this, you're going to see big differences in your Forex journey. I wish you all the best. Like and subscribe, man. Peace from me.